Hello everyone, welcome to the world of smart investment. In the last video, you can see a link to this one above. We conclude that Berkshire Hathaway has a long-term sustainable competitive advantage. But to buy its Class B shares on May 18, 2019 is not reasonable. Today I will explain why it's true. My name is Liubomyr. I am general partner, investor of Equity Capital Partners. I'd like to remember for every investor, especially investor beginners, that for getting best investment performance, as example double or triple S&P 500 or Dow Jones performance, we must have 4 components. Components number 1 is we must have long-term sustainable competitive advantage in business. Second component, we must have excellent top managers team. Third component, we must have beautiful industry with growing trend and moderate or low competition inside. And fourth, we must have cheap price. Really, we must have buy shares of its companies with huge discount to its intrinsic value. Remember, we must have all 4 components together. In Berkshire Hathaway situation, we have components number 1, we have components number 2, we have components number 3. But Berkshire Hathaway doesn't have cheap price. On May 18, 2019, Berkshire Hathaway stock is overvalued. And today we conduct price analysis of Berkshire Hathaway stocks. We don't calculate its intrinsic value with complex valuation formulas. In Berkshire Hathaway situation, it's not productive method. Warren Buffett himself don't use any formulas. We have another method and another investor mindset in this situation. We understand that Berkshire Hathaway is a holding, and Berkshire Hathaway has more than 70 companies, subsidiaries inside on May 18, 2019. And another approach go to the main figure in investing. We must understand that main figure in whole investment is return on investment capital. Based on this approach, our mindset go to this moment. When we buy shares of company, we buy real earnings per share. So if you would buy Berkshire Hathaway Class B shares for $204 per share, we would buy earnings per share $10.9 per share, and return on investment capital for us for the first years 2019, we would be equal only 5.3%. Take attention, Berkshire Hathaway compounding annual growth rate of net income equal 12.8%. We could argue that we bought initial return on investment 5.3%, which will be growing 12.8% for the next 5 years. Question. Let's think. Is it a lot or a little? This is terrible deal. This is very low figure. We can figure out this one by comparing to other investment opportunities, same term. For example, our target of return on investment capital in equity capital partners equals more than 20% annually. Another question. What level of return on investment capital we can get for the next 5 years if we would buy shares at present time for price $204 per share? We know that Berkshire Hathaway doesn't pay any dividends. And let's think and make calculation with financial calculator with compounding interest. Through comparison with profitability of other investment opportunities, we understand that Berkshire Hathaway stock is overvalued in May 2019. After that, another question is logical. At what price we have to buy a Berkshire Hathaway stock to get a better investment performance? Thus, at once, we must define what level of return on investment capital is desired for you personally. Maybe 20%, maybe 25% annually, maybe 30%. After that, after figuring out and after finding out your personal desired return on investment capital, you must calculate this performance. Thus, we can conclude that Berkshire Hathaway stock could be undervalued below $120 per share, below this price level. If this information is valuable for you, if you are desired, if you enjoyed this video, please subscribe to this channel. Every week we produce 2-3 videos, new videos. Write comments below this video. Share this video with your friends, with your colleagues who is really interested to become smart investor. And see you next video.